Welcome back. Nigeria's gross domestic product for 2019 expanded to 2.27% compared to 1.91% recorded in 2018. The latest report from the National Bureau of Statistics shows a strong performance of 2.55% in the fourth quarter of the year. Of course, this represents an increase of 0.17% compared to the previous quarter. A breakdown of the report shows that the oil sector slowed in growth rate at 6.36% year-on-year, and the non-oil sector appreciated 2.26%, with the services, agriculture and manufacturing sectors leading the pack. In nominal terms, aggregate GDP stands at 39.57 trillion naira. That's higher than 35.23 trillion naira in 2018. The National Bureau of Statistics has described the fourth quarter performance as the highest quarterly growth since 2016. Frontier Strategy Group, Dr. Frontier Senior Analyst, West African Markets, Matthew Kiniger, joins us now to drill out on these numbers. It's good to see you, Matthew. Now, what do you make of the Q4 GDP growth figures, and does any sector stand out for you?
Great. Well, thank you very much. Yes, so very interestingly, as you mentioned, growth has increased in Q4 compared to the previous quarter. But when you delve into the data, there are some interesting differences between sectors. So one thing we did see is a sharp uptick in financial services activity in Q4, which is a welcome boost for the sector. And certain sectors such as ICT, especially telecoms, displayed particularly strong growth in Q4. And as you mentioned as well, the data does show that the oil sector, crude oil production, ended the year slightly slower, but actually the entire year performed quite well. However, most sectors of the economy and large portions of the economy performed quite poorly, and there are a number of sectors that experienced stagnant or negative growth. For example, electricity generation performed quite poorly. And we also saw stagnant activity in sectors like real estate, construction, healthcare, and education as well. So quite a mixed picture, actually, for the economy overall.
But what does the data tell us about the health of the Nigerian economy as a whole?
So it's actually quite a complicated picture. Just because the economy is growing at around about 2 to 3%, or 2.27 precisely, it doesn't necessarily mean things are in a very bad way. And for example, the very rapid growth that we've seen, which has been sustained for sectors like telecoms and IT, is very encouraging because it shows that there are sectors that are resilient despite moderate overall levels of economic growth. But overall, I would say the growth rate is fairly disappointing. And this is because some of the drivers of growth are not terribly broad-based. So as we saw, if you look at 29 overall, oil was one of the leading drivers of growth for the Nigerian economy. And this suggests that the economy remains quite vulnerable to oil price shocks, for example. And there's been fairly moderate growth in agriculture and manufacturing. These were viewed as some of the potential growth drivers of the economy a couple of years ago. And these sectors haven't really performed as well as one would hope. And other sectors as well, like the construction industry, have performed quite moderately. And this suggests that investment into infrastructure, which is crucial for the country's diversification, hasn't really taken off as one would hope either.
But with the numbers we've seen now, can you give us an outlook for Nigeria's growth in 2020?
So 2020, in our view here at Dr. Frontier, will probably look a lot like 2019. So we are expecting growth again of around about 2 to 2.5% in 2020. Unfortunately, at a per capita level, this does represent stagnation or a potential reversal of per capita income levels for the average Nigerian. And there are a couple of things that will be driving the growth outlook in our view, or will be determining the growth outlook. So this year, 2020, we are expecting oil prices to fall slightly from 2019. And this does mean that one of the major drivers of growth last year, the oil sector, won't deliver as strong growth this year as it did last year. And there's also, we are expecting fairly low levels of public sector investment. So investment into infrastructure, foreign direct investment as well, will probably be fairly low this year, which will curtail overall levels of growth. And also, conditions for consumers are improving slightly, but they're not as good as they could be. And consumer spending is a major driver of economic activity in Nigeria. And we don't expect to see a significant uptick in consumer spending because of high inflation and fairly moderate private sector job creation.
But what does this mean for business sentiment in Nigeria?
So I will make it clear that from a multinational perspective, the companies that we represent, mainly multinational companies, are very enthusiastic about Nigeria, and they view it as an unavoidable market to be in sub-Saharan Africa because of its scale and also because many companies view it as underserved. Large numbers of customers exist that are not being served for them. But overall, the outlook for business sentiment is fairly moderate for Nigeria. So many customers, so the customer base for most companies will be facing fairly weak spending power in 2020. And this is because inflation is increasing and is expected to remain in double digits this year. So customer purchasing power will be fairly weak. There are also rising cost pressures for business, and this is because of infrastructure constraints, but we are also expecting to see increasing taxes this year as the government tries to broaden its fiscal base. We are also expecting fairly moderate investor sentiment, so fairly moderate investor flows. So this does mean that certain sectors like manufacturing and agriculture, business opportunities in those sectors could be quite moderate. And there's also rising competitive pressure in the market because very few companies are divesting. Most companies are remaining committed to the market, but because customer spending power is quite moderate, that does mean there will be increasing competitive pressure.
Dr. Frontier's Senior Analyst, West African Markets, Matthew Kinniger, thanks for speaking with us on Business Incorporated.
Thanks very much.
Now the news now. The United Arab Emirates has allocated $2 billion for investment and development projects in Mauritania. The president of the UAE, Sheikh Khalifa Al Nahyan, says part of the money also serves as loans to the Islamic Republic. Mauritania President Mohamed Ghazouani is on an official visit to the UAE. And Egypt plans to launch an exploration round for gold in its eastern desert of the first half in March. The Mineral Resources Authority says investors will be bidding on blocks which will be awarded to them within 4 months of the bid round being launched. The country's eastern desert is believed to be highly mineral-rich as it forms part of an area known as the Arabian-Nubian Shield, a geological feature that stretches from Saudi Arabia and Yemen in the east to Sudan and Egypt in the west. In January, Egypt issued new regulations eliminating the need for mining companies to form joint ventures with the government to limit state royalties to a maximum of 20%. And that's our program today. Thank you for watching. I am Bisi Adebayo.